All right, so welcome to another deep dive, everybody. Today, we're going to be looking at some investment opportunities.
Oh, yeah.
And especially because, the market has been, well, pretty volatile recently.
Sure. For sure.
And we're digging into an analysis, it's titled Investment Opportunities, Analysis of Kratos and Lamb Weston.
Okay.
And it's arguing, well, the analysis suggests that we might be hitting like a low point in the market, pretty soon.
Interesting.
And that maybe this is like the chance, if you're a savvy investor, to buy low.
Oh, could be, yeah. That's always the hope, right? To buy low and then, well, the rest.
Right, exactly. So this analysis, it actually pulls from a bunch of different sources. And one of them is this CNBC interview with Tom Lee.
Oh, Tom Lee, yeah. He's with FundStrat Global Advisors, right?
Yeah, that's the one.
I've seen him. He's a pretty well-respected strategist, on Wall Street.
Oh, for sure.
And I think it was just on March 3rd, he was saying that, we could see the market bottom out maybe even this week.
Wow. That's a pretty bold prediction.
It is.
So what's he basing that on?
Well, he's talking about a few things, that have been making investors kind of nervous lately.
Okay, yeah.
You've got government policies,
Yeah.
right? And the trade wars, all those tariffs going back and forth.
Right. That's been, a lot of back and forth.
And then, you got businesses that are kind of hesitant to invest right now.
Ah, I see.
So it's like all this uncertainty, it's just creating this kind of snowball effect,
Yeah.
where fear itself, it's like it actually drives prices down even more.
How interesting.
Yeah. And so we just keep getting closer and closer to that market bottom that everybody's talking about.
I see. So it's almost like a self-fulfilling prophecy in a way?
Yeah, you could say that it's definitely a psychological game as much as a financial one,
Wow. That's fascinating.
It is.
So if Tom Lee is right and we are, heading for this dip, how can people actually, how can they take advantage of that?
Well, that's where it gets really interesting, right?
Okay.
Because this analysis, it highlights two specific companies that could actually do really well in this kind of environment.
Oh, okay.
And they could not only kind of ride out the storm, but they could actually thrive,
So they're built for this kind of market.
Yeah, exactly. They're positioned really well.
All right. So who are these companies?
Okay. So the first one is Kratos Defense and Security Solutions.
Kratos Defense and Security Solutions.
That's right. And their ticker symbol is KTOS.
KTOS. Got it.
And they're all about cutting edge defense technology.
Oh, wow. Okay.
So think drones, satellite systems, cybersecurity, and even, missile defense.
Wow. So they're really on the front lines.
They are. They're basically supplying the tools for, the future of warfare.
Oh, that's pretty intense.
It is. And I know some people might be hesitant about investing in defense, especially with all the ethical questions and everything.
Right. Yeah.
But think about it this way, right? When the economy's uncertain, what do governments tend to do?
Oh, I see where you're going with this.
Yeah, they often prioritize defense spending.
Yeah, that's true.
So a company like Kratos, with all their government contracts, it's almost a safer bet in this kind of environment.
Oh, I see. It's like a counter-cyclical kind of thing.
Exactly. And plus, with all the geopolitical stuff going on in the world right now, the demand for what they do, it's not going away anytime soon.
Yeah, that's a good point. So there's like a built-in demand there.
For sure.
And it looks like they're already doing pretty well, like business-wise.
Oh, yeah, they're killing it.
Yeah.
Yeah, in 2024, their revenue almost doubled from the year before.
Wow.
Yeah, they hit $1.36 billion, which is huge.
That's incredible.
And their organic growth was 99.1%.
99.1%. That's insane.
I know, right? And that means, it's growth from their existing business,
Right.
not just from buying other companies.
Right.
And they also swung from a loss in 2023 to a net income of $16.3 million.
Oh, wow. So they're profitable now.
They are. And then there's this other thing. Their book-to-bill ratio is 1.2.
Book-to-bill ratio, now what does that mean?
Okay, so basically, for every dollar of revenue that they booked, they got $1.20 in new orders.
Oh.
It basically means that more people want their stuff than they can actually make right now.
Wow. So there's like a backlog?
Yeah, it's like a queue of customers just waiting,
That's a good sign.
Oh, it's a great sign for investors. It means there's a lot of potential for growth in the future.
Okay, so Kratos, definitely a company to keep an eye on.
For sure.
Especially if this whole market dip thing actually happens.
Right.
But the analysis, it also mentions another company, and this one is it's in a totally different industry. Yeah, it's Lamb Weston Holdings. It's LW on the stock market.
LW, okay.
And get this, they're a global leader in frozen potato products.
Frozen potatoes?
Yeah, like French fries, tater tots, all that good stuff.
Huh. Interesting.
I know, right? It's not, it's not as I guess it's not as exciting as drones and missiles and all that.
Right.
But there's something to be said for, like the stability of the food industry, right?
Oh, absolutely. Especially when we're talking about, staple products like potatoes. I mean, no matter what happens with the economy, people still got to eat.
Exactly. People got to have their French fries.
It's a global comfort food, right?
It really is. And you know what? Speaking of stability, Lamb Weston, their financials in 2024, they were pretty darn good.
Oh, yeah?
Yeah. Their revenue jumped to $6.47 billion, which is a 21% increase from the year before.
Wow, okay.
And their net income, it shot up by, get this, 43.2% to $739 million.
That's impressive.
I know. And they also had an EBITDA, which is, earnings before interest, taxes, depreciation, and amortization.
Right.
Of $1.41 billion. So what do you make of all that?
Those are some solid numbers. I mean, they're definitely making money, and they're generating a lot of cash, which is what you want to see,
Right.
Especially in uncertain times. A company that can consistently generate cash like that, that's a good sign. It makes them a more reliable investment,
Oh, I see. So even if things go south in the market, they're still going to be producing and making money and
Exactly. They've got that steady cash flow,
That's a good point. That's a really good point.
Yeah.
So it's interesting to me that this analysis is highlighting, both Kratos and Lamb Weston as potentially good investments because they're so different, right?
They are. They're totally different sectors.
Right. Yeah, it's one is all about, the cutting edge of technology and defense, and the other one is the reliable stability of food production.
Right. But they're both strong companies with a good track record.
Exactly. So it's like two different ways to approach this potential market dip.
Yeah, and it's a good reminder that the diversification is key when it comes to investing.
Oh, that's true. That's very true.
You don't want to put all your eggs in one basket.
Right. And especially if things are shaky.
Yeah, if one sector's not doing so well, maybe the other one will pick up the slack.
Yeah, that makes sense.
So yeah, it's good to have a mix.
A good mix. That's right.
It helps to spread out the risk a bit.
Absolutely. Well, this has been really interesting.
Oh yeah, this is good stuff.
Yeah, definitely a lot to think about.
For sure.
And I'm really curious to dig a little deeper, into what Tom Lee is seeing and get more into the specifics of Kratos and Lamb Weston.
Yeah, me too. Let's dive in a bit more.
All right, sounds good. Well, we'll do that after a short break, so stay tuned.
All right, so before we get too deep into the specifics of Kratos and Lamb Weston,
yeah,
I think it's worth spending a little more time unpacking this market prediction from Tom Lee.
Right, because it's not just general market jitters or people being nervous. There's got to be something more concrete behind this.
Exactly.
What makes him so confident that we could be hitting this bottom so soon?
Well, one of the things he talks about, and I think this is really key, is investor psychology.
Okay.
He's basically saying that right now you have all these investors who are paralyzed. Almost by fear, right? They're so afraid of making the wrong move that they're just sitting on their hands waiting for this mythical perfect moment to buy in.
Oh, I see. So they're waiting for all the uncertainty to disappear.
Exactly. They want all the stars to align, before they make a move.
Yeah. But the market doesn't really work like that, does it?
No, it doesn't. The market rarely waits for anyone, and that's kind of the point he's making. This hesitancy, this fear of missing out on the quote-unquote perfect entry point.
Right.
It's actually contributing to the dip itself.
Oh, interesting. So it's like a self-fulfilling prophecy almost.
Yeah, you could say that it's like this collective fear that's feeding on itself.
And pushing the market down further.
Exactly. And that's what makes this dip, so potentially interesting. It's not just about, fundamental economic factors.
Right.
It's also about this psychological phenomena, this herd mentality almost.
And I guess history has shown that, the people who are willing to act when everyone else is afraid, they're often the ones who make the most money, right?
Exactly. Those who buy when everyone else is selling, those are the ones who tend to come out on top when the market eventually recovers, which it always does.
Right, right. But isn't buying the dip, isn't that like inherently risky? I mean, how do you know if this particular dip is the right one to buy?
Well, that's the million-dollar question, isn't it?
It is.
I mean, there's no crystal ball, there's no like foolproof formula for timing the market perfectly.
Right.
But what we can do is look for signs, look for indicators that suggest, that the dip might be bottoming out.
Okay, so what are some of those indicators? Like, what should people be looking for?
Well, Tom Lee, he talks about a few things. One of them is what he calls a capitulation moment.
Capitulation, okay.
And this is basically when, like, the selling pressure, it reaches its peak. It's like investors are just throwing in the towel. They're dumping their assets at any price.
Oh, wow. So it's like a final flush of fear before things start to turn around.
Exactly.
Yeah.
Exactly. And you often see this, it's marked by like a spike in trading volume. There's a sense of panic in the market.
Yeah, yeah, like everyone's trying to get out at the same time.
Exactly. And then another thing to watch for is a shift in sentiment, like a change in the overall mood of the market.
Okay. Yeah, how do you gauge that?
Well, it can manifest in different ways. You might see, more positive news stories starting to come out. Analysts might start upgrading their ratings on certain stocks.
Right, right.
You might even see an increase in social media chatter, people talking about buying opportunities.
Oh, interesting. So it's almost like you have to like read the tea leaves a little bit.
Yeah, there's definitely an element of it's not a perfect science, but by paying attention to these indicators, by trying to understand the psychology of the market, you can increase your chances of catching that dip at the right time.
Right, right. Okay, so let's assume for a minute that Tom Lee is right and we are, heading for this market bottom.
Okay.
We've talked about how companies like Kratos and Lamb Weston, they could benefit from this scenario.
Right.
But let's dive a little deeper into like their specific strengths, like
Yeah.
what makes them so well suited for this kind of environment.
Okay. Sounds good.
So let's start with Kratos. What sets them apart from, like other defense contractors?
Well, one of the things that I find really interesting about Kratos is their focus on cutting edge technology, especially in areas like autonomous systems and space-based assets.
Okay.
They're not just like selling traditional weapon systems. They're really at the forefront of the future of warfare.
And we talked about their financials earlier, which are, pretty impressive.
Yeah, they're doing well.
But what is it about their business model specifically that makes them, well suited for this kind of market downturn?
Well, one key factor is their relationships with government agencies. They've secured a number of long-term contracts, which provides them with a certain level of stability. Even if the economy takes a hit.
Right. So they've got that steady stream of revenue coming in.
Exactly, and their focus on, high tech, high demand areas like drone technology that position them for continued growth.
Yeah.
Even if overall defense spending were to decline.
So it's not just about like selling more weapons, it's about being like at the forefront of innovation in a sector that's always going to be important, right?
Exactly. And that's a powerful position to be in.
Okay, now let's shift gears a little bit and talk about Lamb Weston,
Right.
Because they're a totally different animal. Like how does a global leader in frozen potato products, how do they position themselves for growth in a market like this?
Well, Lamb Weston, they benefit from a fundamental principle of economics, and that's demand inelasticity.
Demand inelasticity? No, I vaguely remember that term from like Econ 101.
Yeah, it's been a while.
But remind me, what does that mean exactly?
Basically, it means that even when prices go up or the economy takes a hit, the demand for certain essential goods like food, it stays pretty stable.
Oh, okay. So people still got to eat no matter what's happening in the world.
Exactly, and French fries, they happen to be a very popular and affordable food option, pretty much everywhere.
So Lamb Weston is kind of like a safe haven in a way.
Yeah, in a way, yes, their products are in high demand, and that demand is likely to persist even during tough economic times.
Okay, but But don't they face a lot of competition, in the frozen food market? I mean, how do they stay ahead of the game?
Well, they're not just, sitting back and selling the same old fries. They're constantly innovating, they're developing new products, they're expanding into new markets.
Oh,
And they're also focused on efficiency and cost optimization, which is always important, but especially during a downturn.
right. So they're trying to make sure they're running a tight ship.
Exactly. They're streamlining their operations, making sure they're as efficient as possible.
So it's like a combination of their market presence, their focus on essential products, and then this constant drive to innovate and expand.
Exactly. It's all those things together that make them a potentially attractive investment,
Oh.
even in a market like this.
Okay, so we've covered a lot of ground here. We've talked about Tom Lee's prediction. We've talked about the strengths of Kratos and Lamb Weston.
Yeah, we've gone pretty deep.
It seems like, both companies offer some interesting possibilities for investors who are, looking to make some strategic moves during this potential market dip.
They do. But as always,
Yeah.
it's crucial to do your own research.
Right, right. Don't just take our word for it.
Exactly. Dig into those financial statements, understand their business models, and most importantly, make sure they align with your own investment goals and your risk tolerance.
Exactly. It's all about, making informed decisions and decisions that are right for you.
Absolutely. Investing it's a personal journey,
Yeah.
and the best decisions are the ones that are informed and tailored to your own needs and aspirations.
Right. That's great advice.
Thanks.
So we've given you the tools and the insights. Now it's up to you to take the reins and chart your own course.
Exactly. Stay curious, stay informed, and never stop learning. That's the key to success in investing.
Absolutely. Well, this has been a great discussion.
Yeah, I've enjoyed it.
Me too. And we hope this deep dive has given you some valuable insights and sparked your curiosity.
Yeah, definitely a lot to think about.
For sure. Well, happy investing, everybody. Okay, so we're back and ready to kind of wrap up our deep dive into Kratos, Lamb Weston, and this whole potential market dip.
Yeah, I think it's a good time to, kind of step back and summarize what we've talked about, bring it all together.
Right, right. Because we've covered a lot of ground here, from market trends to company financials, growth strategies, the whole nine yards.
It's a lot to digest.
So what are the main points you would want our listener to really walk away with today?
Well, I think the most important thing is understanding the current market landscape.
Mm-hmm.
We're in a pretty unique situation right now
Right.
with Tom Lee's prediction of a potential market bottom.
Right.
It's fueled by this fear and uncertainty,
Yeah.
and it presents both a challenge and an opportunity.
For sure. For sure.
If he's right, this dip could be a really good time to buy low, but timing is everything, and
Yeah.
there's always risk involved.
Of course. Of course.
So it's not about just buying any stock that's down. It's about identifying companies that have strong fundamentals, that are well positioned to kind of ride out this storm and come out even stronger on the other side.
Right. And that's where, Kratos and Lamb Weston, they come into the picture.
Exactly. They're two very different companies in very different sectors, but they both have compelling reasons to believe that they can do well in this environment.
Yeah, they've each got their own strengths, their own kind of edge.
Right. Kratos, with their focus on defense technology and those strong government contracts, they could actually benefit from increased defense spending, which often happens during times of economic uncertainty.
Right, and their financials are impressive. They're clearly committed to innovation. They're really on the cutting edge of things like autonomous systems and space-based assets.
They're not afraid to push the boundaries.
Yeah. Exactly. And then you have Lamb Weston, they offer that stability and resilience of the food industry.
Right. Everyone's got to eat.
Exactly. Their global reach, their diverse product portfolio, their focus on essential goods, all of that makes them a potentially very safe haven in a volatile market.
And their profitability, their cash flow generation,
Yeah.
their efforts to constantly innovate and expand. I mean, all of that further solidifies their position.
Right. They're not just resting on their laurels, They're constantly pushing forward.
Exactly.
But as we've as we've said throughout this deep dive, it's so important to do your own research.
Absolutely.
Don't just take our word for it.
Don't take anyone's word for it.
Dig into those financial statements, look at their business models, and most importantly, make sure that they align with your investment goals and your risk tolerance.
It's about taking ownership of your financial future,
Absolutely. It's about making informed decisions that are right for you.
And never stop learning.
Yeah, that's right. That's right. The journey of investing, it's ongoing.
It is, and it's exciting. There's always something new to learn, new opportunities to explore.
Absolutely. Well, we hope this deep dive has been helpful, that it's given you some food for thought, some ideas to explore.
And some confidence to take those next steps.
That's right, to take control of
Yeah.
your financial destiny.
Exactly.
So to all our listeners out there, happy investing.